Yo, what is up, guys? Welcome to another YouTube video. This is episode 4 of the Advanced Stock Market course. Now, happy Thanksgiving to you all. I hope you guys have a great day, have a great weekend. I thought I would do another video just to kind of give you a nice, relaxed time away, and you could watch these videos in your spare time. And yeah, you can make that money together. Now, in this episode, I'm going to go over potential different levels such as your pre-market highs and lows, high impact time frames. I'm going to nibble a bit into the daily chart, not too much because we've spoken about it before. Technicals or fundamentals, what are the main differences for you guys to look at, best time frames to trade, pivots, and a lot more. I want to start off with technical analysis. What is technical analysis? So technical analysis is a method of analyzing historical market data which would help you predict future movements. What I mean by this is when you look on a chart and you look left, that is historical data, and we're essentially going by that, using support, resistance, supply and demand in order to make money. So again, when I say buyers and sellers, on one side you got people buying up the stock, which is us guys, but then we also sell the stock, right? So we could also be sellers. So this is essentially what technical analysis is determining levels of buyers and determining where sellers will step up. Volume is another factor of technical analysis. Volume is, we are the volume, right? Your volume, I'm volume. We bring in that volume. So without volume, technical analysis, in my opinion, is useless because a stock won't move if it has zero volume. It always needs volume in order to move, and technical analysis will do well once volume comes into play. Now, let's look into something called pivot levels, right? And what is a pivot level? A pivot level is a huge level on a chart which determines trend. And what a lot of option traders do is, and I'm kind of moving away from small caps, but option traders, they'll mark the daily high, the daily low of the previous day, and they'll bring it into the next day using it as points to say if a stock is trending up and trending down. This can also be done on multi-day stocks in small caps, right? Such as, let's say, QUBT from last week. You can mark the daily level of the previous day. Once it breaks that level and it holds the level, that is an entry to the upside, showing a trending stock. I'm going to give you examples at the end of the seminar. I'm going to go over on Webull, but this is just an example, right? If it breaks below, you don't touch the stock, so you mark the daily high and daily low, and that's it. But a pivot level, I'll go more into it, but essentially it helps determine if a market is trending up or down, or if a stock will go to that next leg and make those multi-day moves, and you bank. Now, technical was fundamental analysis. A lot of day traders get confused with this because they think fundamental analysis helps them with their day trading. It absolutely does not. Fundamental analysis is not needed much for day trading. I'll tell you when it's needed because you can use it to your advantage, but not the way people do, where they're like, small caps first of all are absolutely trash, right? It's always you versus you, right? A lot of people, they pump stocks, they give you rubbish on fundamentals, and that leads to bigger losses, bag holding. Fundamentals are more, in my opinion, for quality stocks, right? Growth stocks. So you got the likes of Tesla, Apple. Having fundamental plays like these is a lot more relevant. Why is this? These companies are actually good companies that you are looking to invest in their future. These small cap companies are absolute utter trash. So you need to treat it as such. You need to get in and get out as quick as possible. Now, technical analysis is a lot more day trading, even swing trading if you're looking at a longer basis. But even technical analysis on small caps on a longer basis is hard to determine because of how bad the companies are. On a longer basis for higher cap plays, such as the Teslas, your other plays like ASTS, for example, it'll be a lot more effective. So I always say, as a day trader on small caps, focus on the chart, focus on the technical analysis. Now, I'm going to also discuss technical indicators and what they are in general. A lot of people don't know what technical indicator is, but these indicators lag. Don't buy based on an indicator, buy based on price action. A lot of traders, they will buy a stock because the MACD tells them to. The MACD is it's rubbish for day trading. It's absolutely rubbish. It tells you nothing. It moves up after the price. Look at price first. When you look at price, then you could use these indicators as a confluence, right? It could give you the extra bias. But all in all, learn your trading without MACDs and RSIs, etc. So these are examples of lagging indicators. You got your MACD, for me, number one, trash. RSI, again, in my opinion, is useless. Use pure price action. And to be honest with you, MAs and EMAs are not that bad. they're probably the best to use as confluences because everyone else does more or less use them. But don't use them before price action. Use price action and then use it as a confluence, essentially as an extra shield, you could say. If it makes you more confident, it helps you. But all in all, if you're very good with price action, you won't even need these EMAs and all these indicators. Now, I'm going to combine technical analysis and fundamentals, and you can use them both, but don't use them in terms of a swing on small caps. Use them so let's say a stock is running, right? QUBT. Is the theme strong? Okay, quantum mechanics, that's the theme, that's a good theme. Has it had news that day? Is the news strong? If the news is strong, the theme is strong, it has a strong thesis, then use your technicals and it's an A+, is even better setup. However, fundamentals, if you're looking at a longer term basis, it's absolutely trash for small caps. So use it as a day trader. You could use it to your advantage with news plays, with plays that are running and okay, the theme matches. But again, do not trust these companies because at any time they could drop an offering. For example, there's a play called Bibi, right? Bibi dropped 3 offerings, I think within the space of 7 days, if I'm not wrong. A lot of investors lost money on it because they believed in what the CEO said. Full of rubbish. A lot of people lost money on that. But me, my team, what we do is we're in and out and we make sure we don't hold these plays, or we don't gamble into these plays. We use our brains, right? And that's the main thing to do. Now, I'm going to give you a step-by-step guide on my chart. I'm going to go over all this again so you guys are aligning with the Webull chart. I'm going to go over how I set my chart or step by step. I'm also going to go over the time frames I use. Again, I'm going to use Webull as an example when I'm using Webull and what you can use. Now, another thing I want to discuss is looking for gaps. What is a gap? A gap is another way to say, you could say, is window trading. A lot of people call it, but it's an area of the chart where there's a resistance at, let's say, $1. And then from $1 to like 1.5, there's no resistance or support. This is a gap fill, and this is an area with no support and resistance. Usually, these type of charts make the bigger moves. I'll give you an example on Webull as we go along. Now, trigger points. What is a trigger point? A trigger point, again, you could use a gap window to help you with trigger points. So this is essentially where a stock will change direction. It's an area in a chart where bigger moves are made, and it's an area in a chart where it starts up a move to that next leg where there's no support and resistance above you. A trigger point won't be where, let's say, your resistance is $1 and then 1.05, then 1.1. There's no trigger points there. But if your resistance is $1 and you break that resistance and the next resistance is 1.5, $2, and there's no support and resistance stopping this, that is your next window, that is your trigger point for potential scalp to the upside. Now, what is the difference between resistance and trigger? As I discussed earlier, resistance is where you can have resistance at 1.1, 1.2, 1.15, 1.3. A trigger point is not resistance. A trigger point is an area of a chart where you break and the next area above is a lot further along without any resistance. So that is what a trigger point is. I'll give you an example on Webull as we go along. Now, why do I use pre-market highs, right? Pre-market highs are a very good tip for you guys to use. Do I use it every day? I use it when I can, right? Not all the time I will get opportunity to use this, but essentially a lot of forex traders, what they do is they'll use levels from previous sessions to trade. So they'll use a level from previous session, they'll mark that level, they'll wait for that level to break and they'll enter. Pre-market highs, you're waiting for the session between 4 a.m. to 9 a.m., 9:30 a.m. That's your pre-market. And then you wait for the high, you mark your highs, you wait for a break, and if it holds that area, you enter. So this is for buyers. It's essentially areas that failed to break in pre-market that broke in intraday with a higher amount of volume, signifying upward trajectory on a stock. So it's a very good thing to use. Pre-market lows, on the other side, on the flip side, this is good to remove stocks on your watch list. If something breaks below pre-market low, remove it from your watch list. Don't look at it for the day, because it shows that shorts, you're essentially fading the trend. So you're battling against, you're essentially climbing Mount Everest without any safety gear. You're basically, going against the wind, or you're trying to let a car hit you 150 miles per hour by I think you're going to survive. It's very hard to essentially trade those levels unless, you get lucky or you're very, very good at it. Because some people are good at these reversals, but for me personally, once it breaks a pre-market low and the stock is not trending, I much rather trade the stocks that are actually trending and give me a better chance of making a high amount of money. Now, This is not the end of the presentation, but we're going to go over every single thing we went over. So we're going to go over the examples, right? So I want to start off with the main example, which is, let's just go over, okay, I'm going to go over the chart for you guys. Okay, now we want to start off with how I set up my chart step by step. Watch a king in action. Now I'm going to start with my VCIG. It's an alert I gave in the Discord group, but we start with this. Let this load, but you guys will see step by step how I set up the chart, and it'll be something which you guys hopefully like and it helps you. Now start off with VCIG, we remove everything. So now let's say this is me during the day. I'm starting during the day, and I woke up, I'm looking through charts. The first thing I'll do is step-by-step guide. We switch to the daily chart. Now when I switch to the daily chart, I look for areas, historical areas that the chart has previously struggled to break. Now looking at this chart, we have a level over here, around here. So this level here, essentially, it has more touches, so it's a lot more significant. We mark our daily level, so it's a different color. It helps. It does help with the eye, right? We've got a level here. We can see held, broke down, rejected, held, pushed up. That's why it rejected, broke down, created a gap. So this is a window. Essentially, here there's a window here, kind of thing. You see that window. I'm not going to mark the daily level, but that's a window. I'll go more into more detail once I've kind of gone over it. Just give me a second. I'll move this down so a lot easier. Okay. Okay, now let me just go over it. So step by step, guys. We're starting with the daily chart. That's the first thing you do. Now after the daily chart, I'm like, okay, the chart looks good. Let me look at the volume. I'm looking at the volume. Today's volume, of course, I'm not looking at the full day's volume, but 100 million, for example, right? At that time, let's look historically. We've not had a lot of volume. The last time we had a lot of volume was a very, very long time ago. And what this tells us is levels will be a lot easier to break, right? So if we do go on a run, these levels will break with ease if need be. They won't struggle to break, and the chart is a lot thinner than what we expect. Last time we had 6.4 million volume, and this time, of course, we ended up having 257 million volume. You do the math, but from what I'm seeing is that is a lot more. Now, what we do after this is, and quickly show the 30-minute chart. Look for levels where price may have potentially, could have potentially double top. There's nothing on this chart, so it's like a quick 5-second look. Then I switch up to the 5-minute chart, and now I'm gonna remove these levels. But I know my levels, right? I know these levels. I'm gonna remove these levels though, just to make it a bit more clear. So now what I'm doing is I'm looking at the 5-minute chart, and I'm looking at my pre-market level here. This is a pre-market level. I'm just gonna mark it as SNR, and I could quite clearly see here this is a pre-market high. But not only is this a pre-market high, this also becomes an opening high, which is double whammy. So essentially the 30-minute ORB, which is opening range breakout. So that this level is double significant. 1, 2 rejection, 3 rejection, 4 rejection, 5 rejection, 6 rejection. Struggles to break. We get in a bit earlier because we had room towards this level to 3.1. So it was a good scalp, a good 15-20%. We broke above, and look how we held this level, right? And then boom, we ended up hitting 7.74. We got in this at 2.9 in the Discord with an entry, with an exit, with targets. We're not those type of Discords that essentially and analyze it before and be like, okay guys, you could get in above 3.1, get in at your own risk, manage your risk. That's easy. That's the easy bit. Anyone can do that. Anyone can sit in a Discord and do that. That's what 99.9999% of Discords do. They will tell you, okay guys, you can get in, you should get in at this level, and it's easy. And then they'll say this for 100 stocks, and then the ones that run, they'll be like boom, and the ones that don't run, they'll be like, oh yeah, it's your fault, you manage your own risk, blah 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 blah. So when I give you that example, when I say to you guys, okay, you could get in at this level, you could do this, you could do that. I also give an entry, I give an exit, I give targets, and it's very, very important you do so. Reason being is it shows that, you know what, you're not just here to essentially give an alert and just say, okay, get in guys. You're here for the full throttle. So I'm going to show you an example how we did your VCIG. Just remove this for a second. Okay, let's show you an example of the VCIG so you guys could see in full force how you alert these plays. Okay, you guys can see this, right? Watching VCIGs for entries also over 2.9. In VCIG, I'll give you my entry price with a stop loss. Targets, well done, bang, gone. And you get step-by-step guide on how to enter, exit, take profits, etc. So there's literally nothing we're saying to you, okay, nah, you get into this price, set at this price. We're telling you when to take profits, when to do, we're essentially holding your hand and essentially teaching you at the same time. Now this is how I look at charts, and this is how I set up my charts step by step. Daily, look for levels, 5-minute chart. Now I'm gonna quickly go over time frames I use, and again, these are the time frames I use. So when I set up my chart, I set up like this. I look at pre-market highs, I look at daily levels, and the time frames I use are mainly 5 minutes. 5 minutes is the main time frame I use. Sometimes I'll switch over to the 15-minute chart if it's later on in the day and there's low volume on the play. When there's lower volume on the play, 15-minute chart could be good, and especially if you're trading more of a longer output. It takes a lot more patience, don't get me wrong, but it's something you can use. But me, mainly the 5-minute chart, the time frame I use for daily, for day trading is 5-minute chart, and there's nothing else I use. If I'm swing trading, however, so these are my large caps, right? And I look into these sometimes. Let's look at an example. I might even be able to give you a play here. So this is a daily example here. So I look at the daily and I look at 30 minutes. The 30-minute goes above. Okay, the entry was valid around 22. Looking at the daily, the target would have been around, the target is around 24.84. You want at least 10% with the swing minimum. Let's see if that's 10%. That's not 10%. Yeah, so around 10%. So it'd be around 24. And let's look at something like ASTS, for example. I'm waiting for this as a swing. So with this, what I would do is I'd mark this 26 level here. I'd wait for a close above on the 30-minute chart and I'd enter. So once it closes over that level on the 30-minute chart, it's a potential swing entry. So with swings and day trading is different. Primarily I'm a day trader. Now let's look at gap fills, right? So we're going to look for a chart that has a gap fill. I'm hoping there is a chart that I've had, because I had a chart last week that had a gap fill. I think it's PGH. Now this doesn't have a gap fill. Does OPTT have a gap fill? Nope. There was a chart last week I was watching that had a gap fill. Recently viewed. Let me look at recent view charts. So yeah, Kenya doesn't have a gap fill. It's very, very obvious to see a gap fill, by the way. It's very obvious. You can't miss a gap fill. It's very hard to miss. Okay, CMAX, perfect. So when you look for a gap, window trading essentially. What is window trading? Now look, this 0.99 all the way to here, we have legit no resistance. This is not resistance anymore. Why is this not resistance anymore? Because we had that big gap down, so price needs to fill. So this is your window opportunity. When you say window, look, that's your window, right? That is your window. That is your gap fill. So an area with no support and resistance. So this is your trigger point. At the same time, this is your trigger point. So a trigger point will be a break above this level, and if it holds this level, that's a trigger point for a potential move towards 1.6. Will it 100% hit 1.6? No, but you could take profits along the way, and it has the potential to change direction, essentially going on a bullish trend. Now, what's the difference between resistance and trigger? Let's look at it. So a resistance would be, let me just try for you. So resistance, resistance. So these are resistance points, right? This is where chart is rejecting. Look, this is resistance. This will now be a trigger point. You can't have a trigger point above this. It's just not enough space. These are areas of resistance. And let's say now we break out, and there. Let's say now the next point above this, there's no resistance on the left, so it's like this. That would be your trigger point. If there's a huge gap from here all the way to here, there's enough space for this to run. If it's every 5, 10 cents, 15 cents, nah. But if there's a huge gap, and it's obvious like this, there's just a huge gap on the chart, you can just see. With here, there's no gap, right? So these are resistance points, and then this is your window, and that's your trigger point. I hope this helps, and I hope you guys are understanding this. If you're not understanding anything, just put in the comments. I'm happy to go over it at any time. Now, why do I use pre-market highs? What examples can I give you on pre-market highs? So let's look at the QUBT. This is a nice chart like QUBT. QBT. Let's go to this chart. So one example I want to use on QBT first of all is a daily. When I said you look for the daily break, and you could kind of gauge information through it. So we look for a previous daily level, right? So when you look at pivot levels, a lot of people, they look at previous day's level. Now, what day is this? This is the 11th, 14th of November. So this was the day of the 14th. What they'll do is they'll mark that level, and now they wait. They won't trade unless this level breaks. Now, as soon as the level breaks, they have a trigger. They know it's broken, and now it's a tradable stock. And let's look at it. Just go back in time. There you go. It starts to hold that level. See, look, it breaks. Then it just breaks out completely. So these are your pivot levels on a chart, and it's good to use. It's basically a good advantage for you guys to use these kind of charts. It'll help you out quite a bit, essentially. So now another thing I want to use is I kind of want to use pre-market levels, and look. So this level here, right here, is a pre-market high, right? And you see how into open, try to break and we struggle to break. There's no formation here, no pattern. And then once it closes above here, it goes on a big move to the upside. Let's try looking for another one. Might be something which is a bit more clear for you guys. I think these broke after hours. CIG, maybe VCIG. You got again, VCIG is a good one to use because look, you got that pre-market level there. Failed to break into open, couldn't break. Then it finally broke around 10 a.m., 10:05, held that level and made new highs. So that's a good way to use your pre-market levels. Now let's say I had my pre-market low marked, and this is my pre-market low right here. It's the level we were able to break. Of course, this is not pre-market low because it broke out from this level. But if it breaks below this level, I'm basically not looking at the stock again unless it recovers. So yeah, these are your levels essentially. And that's me done for this session, episode 4. I hope you guys understood what I'm saying. If you never, just send me a DM. But guys, please show that love and support. Drop a comment below, like up the video, and I hope you guys have a great Thanksgiving. I'm gonna catch you guys on Monday. I'm gonna be gone for the weekend. I'm gonna go relax, go meet a couple of people, and yeah, catch you guys in a bit. Peace.